second, which is where I do most of my work. On the 5 minute, a little while ago, I noticed that every time price would get down to 26, and Paul, I have to credit Paul from Liberty Trading Club. He showed me this. 26 and 77 are always marked on my charts now because they are very key levels in the NQ. And sure enough, price continued bouncing off the 26 pretty much all morning. And if you were fast, you could grab some trades off that. And I did grab one or two, but I didn't do too well with them just because my timing was a little off. But anyway, what I did notice though was when it came back down to it here again. By the way, when I saw these two seller wicks, I did get a nice little short in here because we call that tweezers, or I've heard that called tweezers. It's a very bearish symbol, and it happened, as you can see, right at the 20 period moving average, which is a green line. This is the 50, the gold. So anyway, the thing about the 26 though is though when I kind of saw it, kind of like really not going anywhere this time. This time that it bounced here off 26, it really didn't go anywhere. And I did notice that it closed right at the 26 line, and that hadn't happened all morning. As you can see, all these closes were well above, not this one so much, but at least it was green and it was a buyer wick there. So it was showing that 26 had a lot of support. But when the price closed red at 26, I was thinking, okay, that's a real sign of weakness. And I would bet my bottom dollar they're going to start running some stops now because conventional traders, like retail traders like myself, tend to think in one way. They kind of don't always see the bigger picture. It's hard, it takes years to start thinking that way. But when you see a close right at a level of support that's been bouncing off every time, you can pretty much figure that conventional traders are looking to buy this area and they'll be placing their stops under this area. So I figured they're going to run some stops, and that's just exactly what they did. They started running stops. And the next logical level of support I thought was 22,000. So I started watching that level very carefully, and I did see a double bottom off that level. A lot of times you'll see with a good double bottom, you'll find that the second bottom will try to run a couple stops from the first bottom. That's another kind of, it's basically the same thing in a fractal for the most part. So I waited for that double bottom, and there it was right there, and maybe run a couple stops from the people that bought this bottom, and then I waited for I took that impulse wave, which was pretty good, waited for that impulse wave to kind of get some confirmation, and then to put my 50% retracement on it, and this one was a little messier than usual because usually I like to see a hammer. But I could see that it was holding this level, this lower level, this 38.2. And when it closed above the 0.5 right here level, I figured we were good to go. So I did buy right here at this 22,009. And sure enough, like, just got a nice pop right after that. And I rode it up all the way up to here. And then it kind of took me out right down here when it popped under this 5-second 50 period moving average. So that was a pretty good trade, and I like to show you that because it's good to think about where institutions are trying to run stops, because basically they're going to run stops, pick up the contracts at a lower rate, at a lower price, get all the money, get all the retail traders money, right, and then push it back up again and sell for profit to other retail traders who are late in the game. So that's kind of what I wanted to show you. It's kind of a brutal game in a way. It's like the smart money takes the other money. I'm not going to call it dumb money, but the smart money knows how to take the money, knows how to sell short, where it needs to. Like they shorted all the way down here, picked up a whole bunch of contracts down here probably, and then you rode it back up, pushed it back up. So what I was trying to do is I'm trying to think like an institution thinks and trying to kind of anticipate what they're trying to do. But, when they ran these stops, that was like you can always tell because a bunch of volume will come in when they're running stops. And again, it was my biggest clue was this area of support that had been bouncing over and over and over again all morning. Suddenly, it couldn't bounce when this 5 minute candle closed, that's why I love 5 minute candles. They really give you a little bit bigger picture about what's going on while still keeping it tight enough for you to make quick decisions, or at least notice things that you really want to notice that are going to be happening very soon. So I really like that 5 minute candle closing at the 26, and then I was just looking for stops to get run as soon as that happened. And sure enough, you saw this spike of volume right here, and then they just pushed it down, pushed it down, pushed it down. Then another big spike of volume right here, ran a few more, and then kind of pushed it up temporarily, and then ran a couple more down here, and then they were ready to take it higher. So that was kind of an interesting trade, and I like that trade. I made a little money off that trade, and it was a good one. Okay, that's it.